Good morning. It's Wednesday, December 17th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So the Advent calendar continues to deliver on the fishing lures. My wife got that at Walmart here. So I'm going to tear the golf course pond up on those bass here after work. Now, looking at silver, looking at the precious metals, green across the screen here. You got silver futures making an all-time high overnight, $66.65. As of this recording, dipping back below $66. The average true range on it is about $2 a day. So quite a bit of volatility there. But the reality is when I look at the tactical ranges here, that next upside 66.50 right around the all-time high, and above that 67.83 is possible and in the cards here for today. Now, one thing to note is that those ranges here are continuing to blow out with the upside and the downside, and we could see a retest here, 62.52 being your first support level, 61.24 and 59.96. So you'll notice that volatility surges and also the expansion of those ranges surges as well. Now you look at it technically here, it is at the top end of a parallel channel. What does that mean? Short term perhaps overbought here, but we're continuing to see the dip buyers emerge here, especially in the ETF flows. Now I checked the leasing rates here over in London and still just anchored at 6%, so no real physical squeeze going on over in the London market. You look at copper futures continuing to consolidate, going back on sale here down to support yesterday right around that 536 level. You've got resistance up at 550. And then you look at platinum and palladium. Well, many clients hold call spreads there. You look at platinum surging about 4% here, highest since 2008. European Union proposed an ease on emissions rules for new cars here and scrapping its effective ban on combustion engines. So you've got tighter supply. Now you've got more increased demand here, and that's a key driver to many of these markets. You also have that structural change here where you had people shifting from buying things like gold as far as jewelry, and they adapted the change here and looked at platinum, that cheaper metal, which gives you great results here. So looking at the gold market here, gold prices, they're rising on expectations for further interest rate cuts by the Federal Reserve next year as the U.S. employment rate rose to its highest level in more than 4 years. So after 4 days of consolidation in the gold market, gold's chart could point towards another move on up to all-time highs. Excuse me, 44.30 an ounce, with likely dips to stay above that support level at 41.90. Only a sustained breakdown under 39.70 really breaks the bullish trend. You got WTI crude oil futures up about 2% here, but really I anticipate that the sellers are quite active in this market here, with WTI crude oil futures climbing to 56 after President Trump orders a blockade of tankers in Venezuela. You look at the API in oil inventories, they dipped about 9 million barrels here, Cushing down about 500,000, gasoline up about 4.8, distillates up about 2.5. So you're continuing to see gasoline prices really under pressure here, alleviating some of that inflation pressure. Now you look at the broader markets here in the bigger picture, you look at stock futures, they are edging higher here. The S&P 500 yesterday, excuse me, did test the key technical level, the 50-day moving average. Not actionable, just something to observe there. You look at the S&P 500 up about 0.3%, NASDAQ up about 0.4%, Russell 2000 up about 0.3%, and the Dow Jones up 100 points here, 0.2%. So you look at the interest rate expectations, they did dip here. So the January 28th meeting, only about a 19.9% chance here that the Fed will cut rates by 25 basis points. Nothing really actionable there. You got 10-year treasury yields kind of bouncing around, 4.15 on the downside, 4.20 on the upside here. Pretty tight range, low volatility or in interest rates. You are going to have some Fed speakers though. You'll have Waller, who now is mixing into the picture here as far as a potential Fed candidate. Not necessarily the greatest candidate here if you are a precious metals bull, as he is more of a traditional Fed official, and he does lean hawkish and dovish, where what Trump is trying to do in the administration is implement people that they know are basically programmed to cut rates going forward. You're also going to have Fed Williams, you'll have Fed Bostic also speaking. Now looking at the dollar index here, because that's a big move overnight, up about 0.5%, 98.24. And you look at the dollar, it's a weighted basket against 6 major currencies, with the euro being the largest one, 57.6, followed by the yen, 13.6, and the British pound, 11.9. So while we're watching that, it's important because there's a lot of things coming out that are going to impact the dollar index and could have this ripple effect on all these other different commodities. futures markets here. So you've got interest rate decisions from the ECB, the Bank of Japan, and also the Bank of England. You look at the euro currency, 117.50, 10-year treasury yields up at 4.17. VIX futures, 16.35. So no real volatility in the US markets. Realistically, S&P 500 trapped between 6,800 on the downside, 6,900 on the upside. A break above that would be 6,950. On the technical side, I'm actually looking at an inverse head and shoulders on the S&P. And if you know me personally, I'm quite bullish here, not only on the broadening rally in the S&P 500, the tech sector with this AI shakiness going to work its way out here before I believe that will power on to all-time highs. And then finally, the Russell 2000, I believe, will be the biggest benefit of all because you're going to have lower interest rates, their productivity is going to increase, and these companies are just going to get better, especially small businesses with the AI adoption. And then also, if you look at surveys, all these small businesses are looking at continuing to hire and broadening their strength here as far as the labor force is concerned. You look at Europe and Asia, well, the European stocks, they rose, led by the energy sector. The UK's FTSE 100 outperformed after a bigger than expected drop in inflation. You go to Asian trading, Asian stocks, they edge higher, led by a rebound in tech shares. Benchmarks rose in South Korea, Taiwan, Hong Kong, and mainland China here, with the MSCI Asia Pacific Index gaining 0.3%, snapping that two-day decline. You go to the precious metal flows, so they are buying across the board. Gold, silver, platinum, palladium. The exchange-traded funds added about 135,000 troy ounces of gold. Total gold held by ETFs rose 18% this year to 98.4 million ounces. That's the highest level since October 23rd. That was also when we peaked the last go around. You go to silver, those ETFs, they rose 19% this year, adding about 1.18 million ounces yesterday. Fifth straight day of growth there, and you got palladium holdings rising for the 10th straight day. So the gold-silver ratio drops to 65 to 1, and I'm gonna have to look at, when I started working in this business about 25 years ago, where that ratio was at. I think it was somewhere around like 45 or so to 1, but I'd have to correct me if I'm wrong. So I'll start having a look at that just for, again, observation purposes, nothing really actionable here. The things that are actionable is when you look at this tactical support resistance levels, you look at way the trends are going here, you look at when positions are overbought, when you're trimming some off, you look at the options, the premiums, when the markets get flushed out, how does the premium react to it? Do we see a big drop in premium out of an option? Or does it hold its premium? Because I've seen instances where silver futures dropped on Friday significantly, and what happened? The option premium on the call side actually gained in value and held because the volatility component exploded on it. So just something interesting to note here and to watch. But if you guys got any questions, you'd like to open up a future trade account, shoot an email to info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.